Well, guys, today decided to do something different. I decided to come on here and kind of give you an idea. For most of you who have never saw the CFS show, don't forget to hit the bell icon. Don't forget to hit our subscription as well. Today, I wanted to come on and just say this. Okay, if I'm starting off today, maybe you watching this video and you trying to start off and you saying, well, what do I invest in? Well, I'm going to just tell you, give you a disclaimer. What I'm about to share with you is not the view of CFS Studios. This is my personal view. Again, this doesn't have anything to do with CFS Studios. I'm talking about stocks I would buy based on the money that I have. I want to put that disclaimer out there because if you're watching this video right now, you may say, oh, CFS Studio or Primo Galicia that has his show. He talked about these stocks. I want you to know this is something personal for me. This doesn't have to do with anybody else. This has to do with personal for me. So I'm looking at a couple of stocks I'm going to talk about today. I'm going to talk about Norwegian Cruise Line. I'm going to talk about Carnival Cruise Line because right now in the tourist industry, you have the situation where people are at that point of, okay, do we go back and travel? Do we not? Is it in favor? Is it out of favor? Well, my answer, as far as me looking at my portfolio, do I want to put up this amount of capital for what the return of it is? So let me give you an example. When I compare these two, right now, Norwegian Cruise Line is trading for $15.35 the last I checked. If that number stays consistent, what I'm looking at is I'm saying, okay, I need to have access to $1,535 to buy new Norwegian Cruise Line. Norwegian Cruise Line in the next 24 months, as far as I'm concerned, I see is about a 13.6% increase. Vice versa, I anticipate this to increase by 32.6% over the next 24 to 28 months. That's my opinion. Again, that is the opinion. If I have access to $1,535, I expect Norwegian Cruise Line to increase by 32.5%. In my own postal portfolio, if I choose to deploy those resources, I'm expecting to see 32%. Now, that's on the high side. So I'm seeing about, if you take the 28 months, that in 28 months from now, I expect the Norwegian Cruise Line to come back in favor and be trading around 20%. If I'm wrong, what is my low expectation? My low expectation is if I'm wrong and it continues to be on the tourist era with all the variants and COVID, then I'm looking at it being in 28 months. If I actually spend $1,535, I'm actually going to see a capital depreciation in my funds down to $11.30 from the $15.35 that I paid for it. And that's important to know because you got to understand stocks can go up or down. But in my opinion, the lowest that I can see this trading, unless information comes out that just completely horrible, I don't see the price dropping below $11.30. Now it can, don't get me wrong. That's why it's subjective. I'm making my point of saying that. And at the same time, if I compare that to Carnival Cruises, I'm seeing that Carnival Cruises right now is around $10.87 trading right now. I see that actually having a 46% upswing. So at $10, I see that I anticipate a high of it going to $14.60 and a low, if I'm wrong, going around $7.34. But here's the difference though. I'm actually using less money than I would if I went at the Norwegian Cruise Line. So if you ask me and you say, hey, if you were in my shoes, well, I'm not. But let me just kind of give you an example. If I got $2,000 and I had to pick between these two companies, these travel companies that are at this particular point not necessarily in favor, they're increasing their overall price in the markets right now. You're seeing that you could have got some cruises a little bit more cheaper than you get them now, but they're bringing out new cruise lines. They anticipate that in 2020 and into 2023, 2024, you expected to see an uptick. So in my opinion only, again, not the views of the channel, I anticipate that if I had $2,000, I actually would add to my portfolio Carnival Cruises. I'm looking at holding that around 24 to 28 months. I'm getting a 46% capital increase in my account overall immediately. Now, what if I switch? Forget about the travel industry. What if I decide I don't want to buy any stock in the travel industry and I look at the property industry? For all you guys out there that want to get into real estate, you think about what can't go out and buy a piece of real estate, but I can actually get involved in some type of property. And I don't want to go out and get a mortgage against myself, but I want to do property. If that's the case, then I will tell you this. I actually looked up EPR property common stock. That's on my watch list. I said, if I have $5,000, would I deploy $5,000 into EPR properties or Airbnb? Now, let me tell you the difference. One, I'm going to have $4,176 even to make this transaction. That moves me away from the travel industry that's out of favor and goes into property, which is kind of right now, property is not actually out of favor. It's not in favor. It's like running, to me, sideways at this point. Property values are starting to come down, but they're not coming down tremendously a lot, even though they raise rates. But here it is. If I go APR properties, common stock, I'm looking at $41.76, which means I at least got to have on my account $4,176. I'm only looking at a high over the next 28 months if I'm holding this in my portfolio. Now, it does pay a dividend. I need to say that. This the first two I gave you, they're not paying a dividend. However, EPR Properties does pay a quarterly dividend. Now, with that being said, I'm still looking at deploying around $4,370. If that is the case, I need to have around 5,000 in my account. My high is only $43.70. That's only a 9% growth. 9%. So if I don't want to look at an unfavored market to hold it for 28 months, then I'm looking at going into a position where I can literally get involved in a stock. And if I get involved in that stock as properties, it pays me a dividend, but I'm looking at a 9% growth. That's it. If I just decide to use 5 grand in this EPR Properties Commons. What if I go Airbnb? Well, that stock is trading at $111.04. So that means I got to have $11,104. So as notice how I keep going up. It's telling you right now that if you have 2 grand, you ain't got no business looking at these properties. You have no EPR Properties common stock. You got no business looking at Airbnb. You need to, if it was me, I would go back and say, okay, this is all I have. If you're just starting off and that's all you have, you got to maximize what type of money you're going to be using. You have to say to yourself, in my opinion, this is what I would do. I would actually go into an unfavorable industry right now, which is not crowded and overpriced. I'll stay in the travel industry. But if you go to Airbnb, you got to have $11,104 even to play with the concept. What am I looking at the high being on Airbnb if I decide to buy that stock? I anticipate the next 28 months to be probably 145. That's the high, 145. Again, these prices, high and lows, are my own when I discount time periods and discount the actual revenues. But if I'm looking at it from a standpoint and I'm saying to myself, okay, if I'm going to go after Airbnb, what is the highest growth I can see if I hold it in my portfolio? And I'm tying up 11,000. Now keep that in mind. I'm tying up $11,104. If I tie that kind of money up, I'm only looking at a 2% gain over the next 28 months. And I said that again. I always say stocks, when it comes down to your overall goals, but it also comes around to your resources and your truths. I mean, you got to look at your debt. I mean, how does tying up $11,000 for 2% growth help? I mean, we do know EPR pays a dividend, but Airbnb does not. Now, let's say we're not going into travel, we're not going into properties, we're going to go into technologies, which has been a lot of under pressure. The technology industry, the metas, anything that has to do with any type of online is under pressure. And since people asked last time, I was asked me, okay, in the group chat, let me just answer this question. Let me pick the old bear in the room that everybody knows about, Apple, because that was the question. What is my anticipation of Apple in the 28 months? Here's my personal opinion. It's subjective. It may not benefit you at all, but after discounting the ratios, 28 months from now, if you're going to spend, first of all, how much money you have, you're going to buy Apple. To buy 100 shares, 100 shares need $14,219. That's right, $14,219. Does that fit? I mean, if you don't have access to 11, we shouldn't even be talking about Apple. You should never buy any stocks. In my opinion, whenever I buy, if I can't buy in groups of 100, I don't buy the stock. If you don't have enough funds to buy 100 shares, and you're my relative, you're my children, you're anything in that regards, I'm going to tell you straight off the top, that makes no sense. You don't have enough. Continue to invest every month like I do. I invest every month. What am I investing in? I'm investing in learning. I'm investing in the discipline of how I'm consuming my own personal finance. Like, I deposit my paycheck. Then once I deposit my paycheck, I go back to my bank statement and says, how many times did I, go out to eat? How many times did I buy something at a grocery store that I shouldn't have bought? I'm checking everything to see how bad am I with handling money, where I'm doing impulse, grocery shopping, then I'm eating out for lunch. Makes no sense. Now, if you go after Apple stock, you're going to realize you got to have that $14,219. But guess what? It's only a 2% growth. I anticipate in the next 28 months that Apple at 176, that's the high. And at the low side, I'm looking at 124. That's capital capitulation. Now, Apple does pay a dividend. However, they have cut their dividend since prior to the split, multiple splits they have had in the last 3 years. So you have a situation that if you're going to go out there and you're going to buy anything, you just need to know that if you're asking me what I'm going to do based on the conversations that I've had is this: I'm just going to pick the travel industry. I mean, if I only got, you think in consideration, if I can get 46% on Carnival, I'm buying it. If my numbers are right and I did my discounting, you need to do your numbers. You need to go look at their filings, look at their quarterly filings, look at their revenue, and do your discounts, and then say how you want to enter that stock. My opinion, if I was to enter it, I know that in 28 months, I'm looking at a 48% increase. That's I mean, that's literally 46 actually increase. And I'm only spending if I got access to $2,000, another month of putting money in my checking and savings and transfer it over to a broker's account, I can probably get 200 shares of this. I'm expecting a 46% over the next 24 months to 28 months. That allows me to know that I'm sitting down in this trade. Now, this may not be the best scenario for you. You got to check your own finances, collect your own truths. But here it is today. I looked at a total of six stocks: Norwegian Cruise Line, Carnival Cruises, the travel industry. I'll do it again next week. Look at some other stocks. Just continue to add them in there to give you some ideas so that way you can get it. Now, my ideas or my numbers, I can tell you may not benefit you at all. I could be dead wrong. So do your research. But what I'm saying, if it was me, I come out each Wednesday and I kind of give you analysis on what I expect. If I'm holding certain stocks in my portfolios, it answers a lot of your questions, but it also gives you some direction to say, okay, I wonder if he's right or wrong. Let's find out. Take today, let's look at it, we'll revisit it, and we say, well, was I right or wrong? But just know this. If you only have $2,000, you don't have no business looking at EPR common stock. You have no business looking at Airbnb, and definitely don't go to Apple. Don't even do it, because you don't have enough to even play that game. You don't buy one share. You buy round lots. You buy 100 whenever you're going to buy. That's one of the greatest lessons somebody can learn is don't buy one, two, or three shares. You buy either in groups of 100, keep saving till you can, and that's how you should approach everything. Because unless you got 100, you lose the ability of using other leverages. And that's important to know. Well, I want to thank you guys for checking out our channel today. Don't forget to like, subscribe. Don't forget to hit the bell icon so you can get the latest content that we put out. And don't forget to log into our subscription package where we talk more on businesses, what type of businesses, how to make sure they run properly. And at the same time, I actually kind of show what my personal portfolio is. So that's the one thing that you get a chance to see. I'll go over my personal portfolio, show you what's good or bad, not hiding anything. But I don't put that out for the general public. I only put that out for people who want to know. Till next time, you guys have a great day, and I'll see you next Wednesday.